Welcome everyone, this is John Sheet at Traders Country Club, and we're making an annual review for 2015 for the stock indexes. But before we begin, we have to look at our risk disclosures. There is a very high degree of risk in any type of trading. This includes stocks, options, futures, and forex trading. And trading is not suitable for all investors. But remember, past results are not necessarily indicative of future returns. Review the hypothetical results that we have on our website because there are many inherent limitations. We begin with the spider for the daily chart, and this has been a very difficult year for all of the stock indexes. And as you can probably tell from January through actually middle of July here, very flat price action. I put an indicator here in which we could look at the percentage change on a daily basis, and you can tell in this particular case for the last 5-6 months we had up and down less than 5% in regards to the year. So in this particular case, by the end of the year, you can see we're slightly negative. Actually, however, many of the different funds actually have lost this year because they have obviously expenses as well as the inability to basically recover this huge decline that occurred in August. This was a decline of about 14%. On a closing basis, it was just under 10. But in this particular case, basically trend we've had, obviously we had this huge sell-off, and we'll talk about the colors in just a bit. But in this particular case, it was very challenging in regards to making a return. As I say, the 2015 was a very difficult, challenging year, and take a look at the price action was very flat. And the reason we've had so much trouble and potential losses is because every time we had the potential of a bearish trend, if we were basically looking to put on a short position, the market just basically returned, but not very strong, because what we've then set up for a potential bull trend and begin to decline. I am going to show you, however, this is why we always talk about where we watch a certain band. This is between 2 and 4 average true range, because it is getting very narrow, and price action is actually why the band is very close to the moving average. And notice that again, it wasn't I would call support or resistance. It's basically just a band around price movement that was issuing a strong enough trend either up or down. This is down about 2 average true range from the moving average, a little bit more than 2 average true range. And so you're seeing a very flat price action for basically 5, 6, almost 7 months. And then of course we had the huge collapse. Luckily in this particular case, there are several ways you could have avoided this decline. Not only, of course, the trend was changing in regards to the red bars, which is giving us an indication of a bearish trend, but even if I put this line here in regards to a longer term support, when we began to break all of this support in July, you were able to basically avoid this huge collapse that occurred. Now what was interesting is that this was just basically within a 3-day span, and then it was bounced up. But as you know, that ended. There was really a long-term bearish trend after all, because instead the market basically sat sideways, very volatile during the August and September period. But by the end of October, it began to move back up. Here we're looking at the blue bars, which is getting a proprietary code that suggests a potential bullish trend. And in this particular case, it did begin to move in the October-November period. But again, it began to just fail. We've had some declines here that we just thought were potential large corrections, like in the middle of November. But now the price action, as you can tell, is underneath the moving averages. It's beginning to move sideways. In this particular case, I do have some indications of a potential bearish trend. That's the indication of the color that you're seeing in the chart. But we'll just have to watch the price action in 2016. The reason I say that is anytime you begin to have a market that is that flat for such a long period of time, you want to basically watch the market for a while. Is that, yes, we've got code and we've got the ability to make short-term trades from time to time, but as regards to a long-term trend, we really don't know. We're going to wait before we make a huge investment in regards to where this price action is going to go. So we're going to watch the price action in the first or second week of January 2016, and then we'll decide what we're going to do here. Now we're taking a look at the triple Qs, and we had a better performance for the year. Here you're looking at 8% for the year. Now we're taking how big the collapse occurred. This was actually from the highs to the lows. That was 25% of decline as a percentage move. So that was a huge move, but as you can remember, that was basically just a one-day event there. We thought the price action began to become bearish. That's why the colors are all red now. And it was looking like that was having a longer-term bearish trend, such as in September. But instead, it came back. In October, we have the blue bars let us know that we have a proprietary, quote, potential bullish trend that occurred in October. And now the price action is just actually, again, just similar to the price action in the spider. We're taking a look at the very, very flat price action in regards to November, December. We're going to watch this. We're getting the kind of bars that we're going to be watching for a potential bearish trend, but we don't have that certainty yet. We're going to watch this price action, and we'll take a look at whether or not we're going to look at a longer term trade here. Now let's take a look at the Dow Jones monthly. The reason I'm talking about is take a look at the price action in 2015. The reason I'm saying that is it possible that we just move sideways for a long time in even this new year, 2016? The reason I'm showing you here is in 1999, 2000, this was a year of which to almost 2 years of just moving up and down sideways. Let's take a look at the price action in 2004. A very, very flat market in 2004 and 2005. 2 years that price is just going back and forth. We had, of course, a year of which basically began to turn in 2007. But I'm just showing you is that it is very possible that next year is going to be very, very flat, just like we've seen in the past. So that's just keep this in mind as you begin to watch the market as an investor. If the market begins to sit sideways more and more, not just in the weekly chart, but especially the daily charts, if it just goes back and forth, then you've got to be very careful in regards to putting on positions on a long term. Reason being is that just follow this from every once in a while. You're going to follow the trend. If you begin to see a developing bear trend, you need to reduce your exposure, because it is possible that we could have another decline. And even if the market just moves sideways, up and down, if you try to basically trade the market while the market is too flat, you're going to find that you're going to have positions that may be long and then it gets stopped out. You put on a new short and then you get stopped out if it began to bounce. Be very, very careful in regards to having losses on a longer term basis here. Just wait, be careful in your analysis of the market, and wait until there's a better year and a better time. This is John Shealy with Traders Country Club.